All right, everybody, welcome back to ExamPrep.ai. Today, I've got for you the notes to the financial statements. Remember, this is our executive summary slash point to elaborate on some of the things we saw in the numbers to the financial statements and talk about it more in depth for our investors and creditors and those users of the financials. Let's dive in. Now, commonly asked will be questions on the summary of significant accounting policies, which is included in the notes because we want to talk about our accounting policies. How do we value our inventory? Like, what determines cash and cash equivalents? If you're not familiar slash haven't memorized what is included in that summary of significant accounting policies, for sure, definitely recommend check out our lecture again. Just memorize it, take another look. So in this case, of the following, which piece of information should be included in the summary of significant accounting policies? Let's take a look. Well, debt refinancing after the balance sheet date. And let's break through what each of these items are, where it would be included if not on the summary of significant accounting policies. This debt refinancing after the balance sheet date, well, maybe it's trying to get you to think it's a subsequent event that you should talk about more. However, that's not the case. This would simply just be on next year's financials. Maybe it would be in the notes of the financials next year, but it's next year, not this year. And also, this wouldn't be in the accounting policies because this isn't an accounting policy. This is a possibly significant transaction or something that happened, but again, not summary of significant accounting policies. As I mentioned before, how you value your inventory, how you determine cash and cash equivalents, that is going to be important as well. So how do you recognize revenue? Do you use the cash basis or accrual basis? Do you have specific rules on how you recognize revenue because of your niche market possibly? Well, I'm going to go with that is likely our answer. However, let's keep reading along. Next, we have the amount of cash and cash equivalents on hand. Now, determining cash and cash equivalents and what belongs in each is an accounting policy. However, the actual amount, this is going to go on the balance sheet as simply that asset class. Lastly, compensation of contract workers. This is, again, simply just not on the notes. This is going to be a number, normal financial statement number, and it's going to be expense on the income statement. Now let's take a look. I've also got these here for you, breaking out just examples of different accounting policies and methods that would be on the notes of the financials. And I highlighted as well, here's where it says that we're going to have special revenue recognition issues are going to be included in the notes. Other examples right here. Take your time, take a look. And final answer is going to be right here for us. Letter B, revenue recognition policies. Awesome. All right, well, we're having fun. So let's keep the train rolling here and take a look at the next one. Of the following, which piece of information should be included in the significant accounting policies? Again, I like to include lots of questions on points that will be important for the test. I know you got to memorize this, and I just want to beat it to death because that's my job. I want to make sure that you are learning, understanding, and knowing what is the most important to see on the exam for each section. Well, debt refinancing after the balance sheet date, that is going to be not included as well. We saw compensation of contract workers. That's, again, not going to be included. Management salaries, these are all going to be on the income statement. Lastly, how do you determine if cash should be a cash or cash equivalent? That is going to be letter D, final answer. It's a good time running through some notes of the financial statements. Hope you all are enjoying, and I will see you all next time.